I've finally cracked the code to trading for good. I've been in the crypto markets for 7 years. I've been consistently trading for around 5 of those years. I've made literally every single mistake that you could possibly make. I've had to learn the hard way through trial and error, through staring at charts, literally 12 hours a day since freshman year of high school. I literally did not do anything else because I was so obsessed with learning how to trade and create a consistent income for myself. Now, as a trader, we're always learning new things, but I've created a system that has worked time and time again for myself and also my students. I've been posting all of my daily analysis and setups inside of the Pro Discord for almost 3 years now. And in this video, I'm gonna be teaching you guys that same exact system. Think of this video as an entire blueprint to going from nothing and unprofitable to finally becoming a profitable trader. All right, without further ado, let's jump into the video. So the first thing that we're gonna cover in this blueprint is the actual trading strategy, right? If you don't have a system in place, then you're never gonna be a profitable trader. You're never going to reach your trading goals. So I've crafted a near perfect system that has allowed us to get these entries here. And I posted these setups in advance inside of the Pro Discord, inside of my channel. Here are some student results, just for more proof that what I'm gonna be showing you guys actually works. So I'm going to use these two examples here on the Pengu token. Now, a lot of times when you'll watch YouTube videos of certain gurus going over certain trading strategies, there's a lot of buzzwords. There's a lot of very complex topics, different ICT models, different candle theories, a bunch of crazy stuff, okay? You, for the most part, probably don't need to learn all of that. When I'm watching those videos, even I'm confused, okay? So I like to keep trading simple. The difference between that and how I trade is that I trade classical charting. If you pick up any textbook regarding trading technical analysis, how these guys trade at the top of these hedge funds, they talk about classical charting methods that have worked consistently since the mid 1900s. And those methods are key horizontal levels, okay? You can call them support and resistance, supply and demand. Doesn't matter what you call them. Fibonacci retracement levels are not only found in the charts, they're also found in the universe. And last but not least, divergences to measure the strength or weakness of a trending asset. Okay, and those are the 3 main pillars to the strategy that I'm gonna be showing with you guys. Okay, so the rules go as follows. Number 1, you want to find a key level. Okay, this is what I was just talking about, a key horizontal level. This is a level of support or resistance that has been respected well in the past, meaning price has reacted from this level multiple times. It's not just one singular level like this low here. Okay, it has to be a general zone where price has reacted from multiple times. Find these levels on a 4-hour and above time frame. I'm not going to be teaching you guys some bullshit scalping strategy that's going to work for one trade and then liquidate your account. Okay, next what you want to do is get your Fibonacci retracement tool. Identify the market structure. Is price making higher highs and higher lows? If you see that break of structure creating a higher high, for example, right here, right, we see a break of structure creating a higher high. You can draw your Fibonacci retracement tool from that swing low to the swing high. Make sure you have your key level in place as well. If you guys don't know how to draw these key levels, I have a trading algorithm that will draw these levels for you automatically. I still recommend learning how to draw these levels for yourself. I've made multiple videos in the past on how to find these levels and what the strategy entails. But that's essentially it, right? You look for market structure, you look for those key levels on a 4-hour time frame, draw your fib. My fib settings are the golden pocket fib down to the 786. This is called our optimal trade entry. Now, the reason that the optimal trade entry actually works is because you're forcing yourself to buy in discount, right? You're forcing yourself to buy low after price has already retraced 70% of that initial range. Meaning, by definition, you are not buying high, okay? You're not buying near resistance. You are buying on a retrace. So when you have that discounted entry overlapping your key level, it offers a really high probability setup. So as you can see here on Pengu, we actually had 2 trades recently, both of which I called inside of the Discord, one of which you had entered here, and the second entry was right around here. Now, there are 2 ways to actually enter the trade. You can set a limit order at the 618 and another one right above the 786 with your stop loss right below. Or what you can do is go to a lower time frame and look for bullish divergences as price is entering your key level. If you guys are wondering what indicator I'm using here on the bottom, this is my own custom oscillator called the Easy Oscillator. If you guys want access, click the first link in the description below and join my pro group. This is the only strategy that you will need to become profitable. If you don't believe me, you can simply go back and backtest this. You're waiting for a break of structure. You're waiting for a large displacement move to the upside. You have your key horizontal level overlapping your key fib level, waiting for those bullish divergences or oscillator oversold to enter the long. You're going to be a profitable trader, okay? Like, that is the system. This is the system that a majority of you guys should be using. And you can add other confluences as well. You can add the volume profile. You can add whatever confluences you already use. But when you're waiting for all of these things to overlap on a certain level and you're waiting for all of your confirmations, it's such a high probability trade. Remember, no trading strategy has a 100% win rate. Okay, trading is all about finding a statistical edge. It's just an edge. Our goal with trading is to gain a skill that we can use for a lifetime, generating us consistent profits month over month. Which brings us into part 2 of this video, which is psychology. This is kind of like a buzzword that's being thrown around, trading psychology. What actually is that? At the end of the day, it's just your mindset going into a trade. It's the ability to stick to your mental framework. Now, no one can really teach you how to have a better psychology. It all comes with time in the markets. But as far as creating your own mental framework, I would structure it something like this. Risk 3% of your portfolio for each trade. That's with DCA and stop loss included. Again, leverage doesn't really matter. It's all about position size. Okay, next we have to talk about risk to reward. Always at a minimum, target a 1 to 2 risk to reward, meaning you're risking $100 to make $200. Now, a big problem that I see with a lot of trader psychology is that they aren't able to let their trade thesis play out. They have a trade setup in mind, and in the middle of the trade, they'll try to micromanage the trade, closing the trade too early before their trade is even invalidated, moving their stop loss to break even way too early. So this is where people's psychology really messes with them. Now, the best way to mitigate this is before you get into a trade, draw out what you want to see on your chart. If you look at the setups that I post inside of the Pro Discord, I always draw out the exact zone, I draw my key level, and I draw what I want to see on the chart before I enter. I already have a general stop loss and take profits in mind. Now, once you enter a trade, the best thing you can do is close your laptop, shut your computer off, set your stop loss, set your take profits, and walk away. Now, the reason you do this is so you're not micromanaging the trade while you're in the position. See, what a lot of traders do is they will take profits at, let's say, a 1-to-1 risk to reward ratio, when in reality, their take profit should be at like a 1-to-3. So they'll take 50% of their profits at a 1-to-1, move their stop loss to break even, and then they get wicked out at break even again. If you take half of your profits at a 1-to-1 and get stopped at a break even, you need like a 70% win rate just to be profitable, right? So instead of taking profits early, let your trade play out. If price closes below your key zone on a 4-hour time frame, you're getting out of the trade. Or if price hits your stop loss, you're getting out of the trade. But until then, your thesis is not invalidated. Again, that's all tied back to trading psychology. A lot of this will go away with just time in the markets and figuring out what works for you, because everyone has a certain style that works best for them in terms of taking profits, moving stops to break even, etc. It really does depend on the trade setup. Looking back in Pengu here, this long position down here, you would probably move your stop loss to break even after this high is met. Okay, so after a 1 to almost 3, you're moving stop loss to break even, meaning you haven't even taken profits yet. Okay, you're just making your trade risk free, because now if price comes back down to this level, my thesis is invalidated. I want to see price go up from here and not come back down. So my stop loss is break even. Maybe I take 50% profits, and my second take profit is at this high up here. Okay, now I'm out of the trade. Now I can look for a re-entry in this zone. Okay, first entry here, second entry here. My average entry is somewhere in the middle around here. Okay, again, stop loss to break even after this high. Now this trade is risk free, and my next take profit can be here at this high. Okay, that's my take profit. So my risk to reward is like a 5 to 6. So I'm risking 1 to make 6. So I only need like a 20% win rate, less than that, to even be a profitable trader in this case. Now, not every trade is the same. That's why mechanical trading methods don't fully work. You can't have a strictly mechanical trading strategy, because price action is different every single time. You can find similar price action, sure, but every trade setup is going to be slightly different than the other one. And that brings me to my final point, which is not giving up. A lot of people will join the space, they want to get rich quick, they don't see results right away because they don't have the proper education, and they end up giving up. They end up quitting. The only difference between people who are successful traders who have made millions of dollars and those who are broke and haven't made a single penny is because the ones that made the millions of dollars just never gave up. They kept working at their craft. They treated trading as a business. They didn't treat it as a hobby, and they put the time and effort in, got themselves in the right groups, got themselves in the right communities, followed the right people, lost a shit ton of money for months or even years on end, and eventually one day everything just clicked. That's gonna happen to each and every one of you if you put the time in and if you follow what I've laid out in this video. Now, if you guys have enjoyed, make sure to leave a like, subscribe to the channel for more trading content. Click the first link below if you want to get mentored by myself, follow my personal trade setups, and get the trading tools that I use on a day-to-day basis. That's it for me. I'll see you guys next video.